So I would like to talk about a little bit about how do I see the impact from the market perspective. Then I would like to make a couple of comments on actually the great explanation that my friend Jalul has done on the banking sector in the region, and I would like to do 3 recommendations. So, coming from the private sector, as a private investor, I'm very pragmatic always. Every time I see a group of governments, multi-governments initiatives, I always think that, wow, that's going to be a difficult one. Because even in your own country, it's difficult. Imagine several countries working together. I also have to say that, you know, in our industry, in the finance industry, we're measured by return on capital employed. So the return on time and effort employed here is very little in the short term. Very little in the short term. And hopefully, very large in the long term. So, let me start with saying something. You know, after living and breathing for the last 10 years in the south of the Mediterranean, the Maghreb region is one of the least integrated regions in the world. We come here after North-South Korea. So, if I do a transaction, and that's the reality, if I do a transaction between Morocco and Algeria, I have to do it through Spain, or I have to do it through Luxembourg. So, this is how little integration it is. Why is that? I really don't know, because when you talk to a Moroccan, to an Algerian, to a Tunisian, or to an Egyptian, they're actually not that different. There actually are much more similarities among themselves than there is with a Spaniard and a German, for example. So there's not such a cultural difference in reality to make this happen. But it's but even said that, I think it's a massive task to undertake. So now let me give you my briefing on the legal, on the market perspective. I think that all the panelists have commented, but from the private investor perspective, I think the legal environment has become stronger for the last 10 years. And that's a very important thing for investors. That's the first, I would say, strongest statement. The second thing is that capital markets and the stock markets are open and liberalized. That's a very good thing for the market as well. The bond market is very, very weak. You know, there is not the bond, doesn't exist the bond market. That's a very important tool for financing SMEs and large corporations. It's almost inexistent besides probably Turkey and Egypt, which are the most developed in that sense. There is very, very weak institutional local investors, pension funds, insurance companies. They do not actively invest into the local markets. So then you lift ourselves with the stock market, which has a large scope, you know, with Morocco 75 companies, Tunisia 57 companies, Turkey 264, Egypt 230. And by the way, Tunisian market, despite the fact that Tunisian market is small in comparison, I think just this year have been more than 10 IPOs, which that's a very active. Having said that, I think it lacks depth, you know, and that depth is linked to illiquidity for the investors. So that leaves us private equity, and we have already mentioned before that private equity in the market is very significant. You know, we are 4 guys, Abdallah, which we see each other in deals, and 4 more there. So that's another big element missing in the industry. But leave us with banks, and this is what we're here for. So I think Jalul has explained very well what we're talking about. In a region that less than 3% of trade is among the countries, size is an issue. You take the whole of the banking industry in those 3 countries, besides Egypt, and the market capitalization of all of them is similar to the BNP in France. So size is an issue for the banks. So there is not a large dominant bank that could actually play a role on a global basis. I think the Moroccan banks have done a great job on penetrating into Africa, particularly the sub-Saharan Africa. I think the penetration of the Atijara Wafa Bank, the Banque Populaire, the BMC have done great for the region, but still there is a lot to do. Tunisia is extremely fragmented. There are too many banks, which that doesn't allow to have, like I would say, a competitive banking advantage into the country. The same for insurance. There are more than 24 insurance in a 10 million population country. So, and Algeria already have been said, you know, 86% dominated by public banking. So, how these 3 very different markets, and I cannot talk to Egypt because I don't have I would say, know-how experience in the market, but also it's extremely difficult, which larger banks are a bit more complicated. But how these four very different banking structures can become unionized, I don't know. I don't think I'm not smart enough to tell you what is the next leapfrog to actually manage to do that. But it looks to me very challenging. Now let's talk about something else, which is reality. Why do we need that? We need that to have more finance. You know, this is like the blood of the body is the money for the companies, as a similarity. Without the money, companies don't work. The banks in the sector and in that region are not equipped to finance SMEs. SMEs represent 95% of the economy. They're not equipped. The inability of prepared dossiers for an SME, the inability of an entrepreneur to prepare that with a bank, the inability to prepare a business plan. The same teams in the bank that they work for a large financing of an airport of 150 million will be the same ones that they're working for a 3 million loan long term for a small SMEs. So the cost of the transaction, I think we have said before, is critical here. And the teams are not equipped for that. So then, that financing from the banking system is mainly driven by an asset-based company. So tell me where your assets, tell me how much I will finance you. Or by the personal wealth and assets of the entrepreneur. Tell me how much worth is your house or your lands or your other investments, and I will finance that for you. That's a major barrier for economic development to the region. Now, let me just give you my recommendation for the banking union system, being more pragmatic from the private investor side. You know, we have a saying in our company, Mediterrània Capital Partners, we have a saying that we are confronting many days with large, complex deals, you know, large companies, it's quite complex. And we always say to ourselves, how are we going to eat this elephant, you know? And what we say always that, you know, you eat the elephant by bit. So you start biting it one, chewing it, digesting it, and going through that process. I think here the project is so large that my recommendation would be to set a small milestone for that banking union. Second recommendation would be the central banks can and should play a very important role. You know, it should be a highly number of meetings and forums on that regard. And I think the IEMed is doing an excellent job, but it should go beyond that. The banking system needs to modernize and needs to adapt their internal systems, their processes, to focus on SME financing. It's very difficult, but needs to be done. And lastly, you know, here in Spain, prior to Lehman Brothers crisis, the banking system were like very active in the private equity arena. So allowing private banks to invest in regional funds, I think will be another element of two things. First of all, support the SME growth and financing needs, and also create an informal platform for banks to start a dialogue for this banking union. So that will be all. Thank you.